That's a misunderstanding of what it is. Obviously, Ponzi schemes are operated by criminals, a lot of action and behind the scenes to recycle capital. Bitcoin is better described as a city in cyberspace. If you imagine a city that's 276 blocks high, 276 blocks wide, 276 blocks deep, that would be about 21 million. And it's a network, a shared network that people all around the world voluntarily enter into, and you can buy one of those blocks, and you can take custody of that block, and you can keep it for 100 years, and you can give it to your children's children's children. So if you think of it as digital property or the greatest city in cyberspace, it's when you move into Manhattan and you tell all your friends to move in Manhattan and they all move to Manhattan because Manhattan's the greatest city in the U.S. and the price of land in Manhattan goes up. That's not a Ponzi scheme.
Yeah, exactly.
That's an example of a place where everybody wants to live because it's the best city to live in North America. Imagine a city in cyberspace where 8 billion people want to live. And, they don't live physically, but they live economically.
Just recently, JP Morgan CEO Jamie Dimon called Bitcoin a fraud and a Ponzi scheme, and says the crypto is hopeless as a currency. Dimon has trashed Bitcoin repeatedly in recent years. He's compared it to smoking a cigarette, said it's dangerous to own, urged people not to buy it, and called on governments to ban it. And while Dimon may be vehemently opposed to Bitcoin, this has not stopped it from hitting record highs this year. In a recent interview, long-term Bitcoin advocate and MicroStrategy founder Michael Saylor speaks up regarding the circulating claims that Bitcoin may be a Ponzi scheme. Typically, a Ponzi scheme is a type of investment scam where returns for earlier investors are paid with the money from newer investors, rather than from actual profits generated by the investment. Michael Saylor argues that Bitcoin is not a Ponzi scheme because it fundamentally differs in structure and purpose. He likens Bitcoin to a digital city in cyberspace, with a fixed supply of 21 million coins, where individuals can voluntarily buy and hold blocks of this digital property. Unlike a Ponzi scheme, where returns for early investors depend on recruiting new participants, Bitcoin's value relies not on continuous recruitment, but rather on its scarcity, utility, and adoption as a store of value. Additionally, Bitcoin operates on a transparent and decentralized blockchain network, where transactions are publicly recorded and verified, eliminating the need for a central authority to manage the system. Let us now view more clips of Michael Saylor as he further elaborates the many other valid points on why Bitcoin is a great and secure investment. As we show you these clips, we encourage you to show your support by giving us a like, subscribing to the channel, and turning on post notifications to stay updated with similar content. Make sure to stay until the end of the video, as Michael Saylor explains why Bitcoin is a digital property that appreciates over time. Thanks, and enjoy.
Everybody in the world has a problem. And the problem is they would like to store their capital and preserve their capital. And they'd like for someone not to steal it, right? So they all need this bank in cyberspace where they can store their life savings and know that it will hold its economic value. If God came down from heaven and offered to set up a bank with 21 million coins and keep the money in heaven and let you telepathically zap it back and forth and make sure no one cheated anybody and do that for the next million years, that would be a better bank than any bank we have, and it would be a better currency than we have. But, God's not going to do that. And so the next best thing is if you create a bank based upon cryptography, based upon computer science, and you give a copy of that software to everybody in the world that wants to use it, and then everybody voluntarily buys and sells those units we call Bitcoin and holds them if they wish to hold them. And anybody that tries to cheat the system gets kicked off the network. So Bitcoin is better thought of as a protocol, a fair, equitable protocol for people to trade economic value or store economic value. And it happens that the more people that use the protocol, the more valuable it becomes. Not so different than English, the language. The more people speak English, and the more money the people that speak English have, the more useful it is for you to learn English. And like New York City, the more people that move to New York City with more money doing more things, the more valuable your real estate is in New York City. So it's basically a network. It's the world's greatest monetary network, a digital monetary network. And what's special about it is it's open, permissionless. Nobody owns it. No country controls it. No company controls it. No individual controls it. It is the result of an experiment where the 50 predecessors all failed and thousands of copies failed. And it's the winner in this Darwinian market economy for money. And what you have is a network where hundreds of millions of smart people with money have entrusted hundreds of billions, now $1 trillion or more of money to the network because it's a much more efficient way to do things. And that being the case, it's just the world's first scientifically rational engineering protocol for economics, for economic cooperation,
Yes.
or for monetary interchange. And that's something everybody needs. Nobody can stop, but most people don't understand. And the reason that it makes sense to spend 100 hours studying it right now, and the reason it makes sense to buy Bitcoin is all of my best investment ideas are things nobody could stop, everybody needs, and nobody understands.
Now, just a quick news intermission before we proceed with more of Michael Saylor's insightful perspectives. Bitcoin has seen a 20% decline over the past 3 months. Still, figures like Raoul Pal, CEO of Real Vision, and Rect Capital, a pseudonymous crypto trader, remain unfazed, considering this as merely a routine correction in the market cycle. They argue that such corrections are necessary for Bitcoin to realign with historical price norms and the traditional halving cycle. Meanwhile, Ben Simpson, CEO of Collective Shift, sees the market possibly entering a lull period post-Bitcoin halving due to a lack of new narratives for traders. However, he remains optimistic about the long-term prospects. Crypto trader Gali Sama also points out bullish indicators like the forming cup and handle pattern on Bitcoin's price chart, indicating a potential breakout in the coming months. With that, let's return to Michael Saylor for more of his bullish insights on Bitcoin's future.
Bitcoin is a brilliant system engineering achievement.
Agreed.
Because it is many parts. It has servo mechanisms in it, feedback systems. It has very intricate computer mechanisms and economic mechanisms. But the things that I focus on that are very beautiful to me, one is the idea of creating a crypto commodity. How do you create an asset without an issuer that nobody controls, that is self-sustaining?
Yeah.
And that's a first in human history. That is really a beautiful thing. In theory, you can create other crypto commodities, but it's very hard. And if they're serving as money, you'll tend to have all the money collapse to one. Like,
Yes.
if
exactly.
people use gold, they won't use silver.
Yes.
And so it's definitely the king crypto
Yeah.
commodity. The other thing that's really beautiful about it is this brilliant leap from commodity to scarcity. It's the first time in human history that we created a commodity with a hard supply. Every money in history, glass beads and bales of tobacco and stone coins and copper tokens and paper currency and cigarettes and fiat currency, all of those things were uncapped. We can create more of them. Land, timber, real estate. You can even extract land from the sea. You can create
Yes,
more of it.
exactly.
Bitcoin is the one commodity that you can buy and you can hold where it is absolutely capped 21 million. So if the price goes up by a factor of 100, the supply is invariant. There is no other commodity where the supply is invariant to the demand or to the price. That makes it perfect money. It makes it the best store of value asset. Most other commodities are much worse. If a commodity has a stock to flow ratio of 1 and you produce, twice as much, or the equivalent supply every year, it's not going to be good money. If the stock to flow is 50, it might be better money if you only inflate the supply by 2% a year, like gold. But it's still not great because every 30 years you cut your money in half if you inflate 2% a year. So this leap from the idea that there should be a 2% inflation rate to the idea that there should be a 0% inflation rate. That's a profound idea. Most classically trained economists and all the Keynesians would tell you 2%. 2% is the right number. We want 2% inflation. But 2% gives you a half-life of 30 years. 1%, you get to 72 years. 0%, you live forever. There's a pretty big difference between 0 and 200 basis points. One thing is you live forever, you're immortal. And the other thing is 30-year half-life, So you don't think it's a lot, but it's profound. Do you want a building that will stand forever? Or do you want a building that will crumble in 30 years? And once you start thinking about that, you realize if you build a capital structure of a company or a family or a country on an asset that's crumbling every 30 years, your civilization's going to struggle. Gold's got a half-life of 30 years. The US dollar is inflating about 7 to 8% every year. It gives you a half-life of 10 years. Most currencies inflate at 14% a year. Gives you a half-life of 5 years.
5 years.
And then some currencies inflate and have a half-life of 18 months. And so you start and ask the question, I want to build a government. I want to build a family. I want to build a company. I want to build a nonprofit. I want to build a bank on a capital structure that will last forever, or 30 years, or 10 years, or 2 years.
Yeah.
And so that second idea of scarcity, that's a very brilliant breakthrough. The third idea that's a breakthrough is transactional scarcity, second-order scarcity. The fact that there's only one block every 10 minutes, or the fact that there's only 4 megabyte blocks, or there's only 4,000 transactions, maybe 7 transactions a second. A lot of people think that's a bug. That's a feature. That's actually how you enforce security and you create a market economy in transactions. So you won't have first-order scarcity if you don't have second-order scarcity. So Satoshi was smart enough to realize that you just can't move the Bitcoin around every second because the security will collapse and the stability of the network will collapse. And I think that was very brilliant. And the last brilliancy is the use of proof of work.
Do you agree with Michael Saylor? And how would you explain to others whether Bitcoin is or isn't a Ponzi scheme? Share your thoughts and join the discussion in the comment section below. If you found some value in today's video, we would appreciate it if you hit that like and subscribe button. Lastly, if you would like to be updated with all of our future updates, please tick that notification bell. Your support encourages us to create more content on the latest relevant news in crypto. Thank you for watching. We hope to see you in our next video.